Have you ever felt that with just a little bit more cash, just a little bit more, you might be able to finally break the cycle of poverty and go on to do something massive with your life? If you've ever felt that even $3,000 could make a life-changing difference for you, you're not alone. Enter microloans and microlending. Now, before we dive into this topic, I'd like to point out that we are currently holding 100 baby ducklings hostage over a canyon, and the only way they'll get out of this alive is if you watch until the end of the video. Now, I'm not joking right now, this is deadly serious. Only if you watch until the end of the video will we set them free. If you don't, bye-bye duckies, and that's on your hands. You have to live with that. Can you? Can you? Okay, so keep watching. In this video, we'll cover what microloans are and why they're an important tool for both eco-friendly solutions and reducing global poverty, and the pros and cons of this relatively new financial concept. We'll conclude with a "what the hell was the point of all this" segment, which is my favorite, as maybe it will tell me too what the hell the point of all this has been. As a spoiler, a tiny loan of just £3,000 was enough to completely change the life of one of my podcast guests, Lucy Jeffrey, who used this relatively small amount of money to start an eco-friendly business that completely changed her life. Now, she swears that without it, she would have never been able to make the leap that would put her on a vastly different, much happier path. So yes, microloans can have a massive value for a small investment if provided to the right entrepreneurially minded people under the right conditions at the right time. If they're spent on groceries or worse, a batch of product from that MLM your bully from high school keeps trying to sell you on Facebook after 20 years and never speaking to you or apologizing for what they did to you, well, in that case, the money will just simply disappear. For some, a small amount of money is exactly what's needed to finally break free of poverty. For others, it's a toss on red in Vegas that earns nothing more than a couple of watered-down well cocktails. So let's take a ride on the thrilling train that is an infotainment YouTube video from a stranger that you don't know or care about. First, what are microloans? Well, the Oxford Dictionary defines a microloan as a small sum of money lent at low interest to a new business. Boring. Just kidding. No, I'm not. To begin with, we're going to have to ask ourselves, what is micro? Now, this is a point that me and my wife disagree on. We've been over this, hun. It's not micro, it's perfectly normal size. In many countries with a high standard of living, a microloan is defined as somewhere between $500 and $50,000. In poorer countries, a microloan could be as small as a handful of chickens to produce a sellable product. As Marguerite Robinson puts in The Microfinance Revolution, during the 1970s and 80s, a few people from a variety of backgrounds began to learn the dynamics of local financial markets in developing countries, and to consider whether and how financial institutions could operate viably in these markets. The word microfinance had not yet been coined. Well, it wasn't until the 1990s that these new concepts began to solidify into what we now know as microloans. In 2021, the global microfinance market was valued at nearly $179 billion. So a lot has changed in a relatively short amount of time. But what is a microloan exactly? Well, an article called "What is a Business Microloan?" says, a microloan is a small loan that must be paid back on a short-term basis, generally provided by nonprofit organizations. These loans make up only a small fraction of business loans in the U.S., with Cabbage estimating that only 400 financial institutions currently offer them to entrepreneurs. Now, these loans tend to have interest rates between 12% and 18%, with the intent of helping small businesses get off the ground and continue growing. These percentages matter, as anyone who's invested in the stock market, like right now, will understand. But more on that later. From an article on Bali Insider, Microfinance Institutions, or MFIs, borrow money from banks, and they use it to make loans to low-income customers. These organizations play a crucial role in increasing financial inclusion in rural areas. Because that's just it. Many people around the world don't qualify for conventional loans for any number of reasons. The last few years, these waters have become murkier still thanks to a global virus and all of that. During the pandemic, some countries offered microloans on a large scale, like the UK's bounce back loan scheme at low or even zero interest rates, to help people like my friend Lucy Jeffrey build their business. Especially these last couple years with the US's Paycheck Protection Program or forgivable small business loans from the US government, many of us got a tiny taste for the impact that these typically small amounts of money can actually have. Of course, it's different when you're coming back from a cliff of sheer apocalyptic terror, not knowing if the grocery store will even have toilet paper ever again. For many of us, these loans were needed during the pandemic to get out of a bad situation. Obviously, many more people weren't and aren't so lucky, but in a sense, that pandemic feeling of impending doom that we've all experienced since 2020 is very similar to what inescapable poverty has always felt like. The crushing weight of a world that doesn't care whether you live or die cripples even the strongest among us in any country. So what are the pros of microloans? Well, let's start with the obvious pro. Microloans are typically available to people who might not otherwise qualify for a conventional loan from a bank. They're generally cheaper with more favorable terms than more predatory loans like shark loans, which you may have heard of, for example, which still, unfortunately, run rampant in poverty-stricken or immigrant neighborhoods where people live outside the system. Loan sharks, for example, lend money at extremely high interest rates with extreme punishment for lack of payment, such as bodily harm, which is why we all know that if we don't watch out, Benny's gonna break our legs. There are many hurdles that prevent people in low-income areas from getting loans, including illiteracy, cognitive impairment, or a variety of other all-too-common scenarios. An article called What is Microfinance says that in 2009, around 75 million individuals benefited from microloans that totaled to around 38 billion US dollars, and the repayment success rate ranges between 95 and 98%. In the US, a study found that more than half of US loan recipients escaped poverty in 5 years. Well, I don't know about you, but that sounds pretty amazing, almost too good to be true. Some studies have refuted statistics like these, but no one can deny that many people need a surprisingly small sum of money to dramatically change their lives. Now, we're not talking about getting $200,000 free here for a house or for school debt, which is another topic altogether, but rather just a small extra bit needed to push the right entrepreneurial person over the top. But who is the right person? Well, we know that selecting the right candidates is key. Giving $3,000 to Uncle Gary will just bring more crazy and chaos into the world, not help it. It's not like old Gary needs an extra 3,000 cans of Miller High Life. MFIs, or microfinance lenders, saw the best results when they appropriately vetted their candidates before lending, which admittedly is a whole different can of worms we're not really going to cover in this puff piece. As you can imagine, anytime decisions like that are made, bias and prejudice can creep in if we're not careful. One study referred to the ideal recipients of such microloans as gung-ho entrepreneurs, as opposed to reluctant entrepreneurs like me. I can't even be bothered to get out of bed until somebody pokes me hard with a sharp stick repeatedly. The descriptor gung-ho is pretty self-explanatory. Some people are self-starters, champing at the bit to make a difference. Others are, well, Instagram influencers. I'm just kidding. I'm kidding. All right, I'm sorry, comment section. I'm kidding. That was a joke. It was a joke, okay? Microloans are a great way to help people with initiative and ideas change their lives, and for many entrepreneurs, they're also often connected with sustainability. A piece called How Microfinance Loans Help the Environment says, on the environmental front, microfinance is, in and of itself, green in that it promotes businesses that can be sustained indefinitely. Example after example over the last 3 decades have proven the concept that when poor people are given opportunities to earn a living in a legitimate and sustainable fashion, they have little or no need to pillage their surrounding natural resources to shelter or feed themselves. Now, this seems like a trifling detail, but it's an important concept in many rural areas. One program called Grameen America requires participants to form a peer network of 5 people and undergo group financial training, including instruction on loan repayment, interest rates, saving, credit establishment, and asset accumulation before awarding an individual a low-interest microloan, again, of between $500 and $2,000 to start or expand a small business. To date, this organization has provided over $2 billion in investment to over 150,000 women entrepreneurs. China historically banned MFIs and commercialized microloans until 2005, but when they allowed them, this opened the floodgates for resources that help tackle poverty and spur the growth of enterprises in rural areas, where the majority of the country's 400 million people who live on less than $2 per day are concentrated. Since the approval of microcredit, the industry has actually grown exponentially. And that's just it. Microloans can reach and benefit the poorest of the poor, and they can help jumpstart communities and individuals who just need a little push. In many countries, the idea of a microloan being up to $50,000, many multiples of anyone's yearly salary, is absurd. In many communities, help comes in the form of sending something way smaller, like a cow or some chickens, or any kind of tangible asset that somebody who has historically never had assets can own. In fact, a recent article on MIT News by Peter Dzikes, I hope I'm saying that right, shows how an ongoing field experiment in Bangladesh has proven that something as simple as giving a person a cow a one-time boost can make a major difference. Scholars examined the long-term survey data from 23,000 households in 1,300 villages, and they found that the sudden acquisition of a productive asset, even say one cow via a randomized asset transfer program, can help spring the poor from that trap if it brings them above a basic wealth threshold. The bottom line is that the poor often simply lack opportunities to gain wealth, and the results of this study are very encouraging. But with all of these positive attributes, there must be a catch, right? Which brings us to part 3, what are the cons of microloans? In the 2000s, skepticism about the promise of microcredit started cropping up. Concerns like microcredit institutions were harming people due to over-indebtedness, the pressure to repay loans, and widely reported suicides among borrowers is concerning for sure. I mean, that's about as grim as it gets. See my comment earlier about shark loans for an idea of how bad things can be. This is from the depressingly titled piece called Microcredit Was a Hugely Hyped Solution to Global Poverty, What Happened, on Vox.com. As with any concept, microloans can be abused if the terms aren't set right. There's an inherent imbalance of power when one organization or person holds money over another less powerful one, like a carrot in front of old Bessie's nose. If candidates aren't properly vetted, or worse, if for-profit companies use predatory lending practices, it can negate the whole idea from the start. The effectiveness of these programs depends largely on how they are implemented. Another con? Apparently women are more reliable than men, both in repaying these loans and also in putting them to good use. Not my thought, just stuff I've read. An article called What is Microfinance says research shows that women are much more altruistic with their incomes. According to research by the Harvard Review, women reinvest 90% of their every dollar that they earn back into their family's education, health, and nutrition. The same article claims that there's a wealth of information to support this disparity, but I'm not like that as a man. I'm different. Who am I kidding? Who am I kidding? I'd spend it all on nachos and beer. If these loans are so magnanimous, you might be wondering why they're issued by private organizations and why interest is charged at all, and therein lies the issue. These types of loans are designed for people well below the poverty line. These people don't have collateral, they don't have employment history to speak of, or other traditional markers to establish credit worthiness. This makes it tough for even the best intentioned organizations to keep the lights on themselves while helping other people. So what the hell is the point of all of this? Well, there's a few takeaways here. 1, if you give the right people a relatively small boost at the right time, amazing things can happen. I've witnessed this with one of the incredible stories that I've featured on my podcast, Lucy Jeffrey, whose interview you can see on beattheoftenpath.com. 2, microloans are an interesting concept to help break the often inescapable cycle of poverty around the world, and if you need a little entrepreneurial boost and are unable to get a traditional loan, they might be a good place to look. 3, predatory assholes can ruin anything, microloans included. Anytime money's involved, greedy people are involved, and that's the end of that story. But what's the second biggest takeaway? If you have an idea or even a proof of concept that you're unable to get a traditional loan for, consider visiting one of these organizations to see if you can get a microloan. I'm going to provide a list of organizations to check out so you don't have to wait for the next pandemic just to get a couple extra grand for your business. And now, for the biggest takeaway of this video. You made it to the end of the video, which means that 100 baby ducklings will not be harmed today. You're a good person. You really are.